Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at ticker symbol CPNG. They do have earnings after the bell, I think. Yes, later today. So what I want to do is I want to figure out, is this stock worth $23? What are institutions and hedge funds doing? I want to run my calculation and see if this is massively overvalued, undervalued, see what analysts are giving a price target of, and just look for gaps and where we could see the price like have a magnetic pull to. So without further ado, we're going to go ahead and subscribe and jump on in. Maybe leave a comment or a thumbs up, thumbs down. If you're in the stock and I offend you, sorry in advance. So, looking at the daily chart, there is earnings today. The stock has had a fall from grace. I'm looking for gaps that were left open to the upside. So anything higher than $23. Nope. Okay, here we go. We're getting there. Wow, there are no gaps to the upside. Like right here, you think, but then you can see this candle close that gap. Um, no gap. Nope, the gap is closed right here because the stock's 23. So we're gonna have to chart this one out, which I am okay with. Um, and what we can see just at a high level, FinViz actually has this within an ascending triangle, which I don't know if I agree with because it's on the daily and FinViz is no criticism to FinViz's algorithm, but it's just not enough data for me to trust their daily chart. So um, we can see also the 50 SMA has been established. This is a newer stock, by the way. Let's look at the monthly chart. The stock came in 2021, and it's only been it's had a fall from grace. But we're going to chart this out for a potential stock price on the upside and the downside. To the downside, we obviously have a gap to fill at 19. Um, these gaps have been filled here. So on the downside, again, this is obvious, glaring, a gap down here, but this is typically a bullish setup. We have our bull flag. Here's our flagpole. Here's our flag. And then we have another flagpole. Here's our flag. And the stock is trading above all of the indicators. And I'm sorry, this is the 730-day SMA, not 50. And you might ask yourself, why do you have a 730-day SMA, you crazy psychopath? The SMA is a simple moving average. It's based off of calculations for those prior days. So the prior 735 days, it starts to follow the trend of where the stock is trading. And you ask yourself why. I also have a 365-day SMA. That's the yearly. Again, I'm a psychopath because look at where the candle exactly goes. Right on the 735-day SMA. That's a 2-year simple moving average. Kisses it, goes up. None of these moves are random. I mean, yes, it may seem random, but it goes up to the 200-day level, which is 735 days, 365 days times 2, 730. Am I right? Am I wrong about that? No. 730-day SMA. So 730 SMA right there. Kapoosh, capiche. All right. So to the downside, I do see this going to 19. To the upside, let's just look at the supports and resistances here. This will be pretty simple. So we've got good resistance there, good support and resistance there. You're probably asking yourself, where the hell are you drawing these lines? You can see right here, this candle acts as a support. These 1, 2, 3, 4, 5 candles acts as resistance. It confirms that this line exists and it should not be ignored. Same for this line right here. It acts as support one, two, three times, acts as resistance twice, and it cannot be ignored. Our all-time low support will be right here at 1269. There we go. So to the upside, I think we see $27. To the downside, we do have that $19 gap, which I think we would want to be filled before it goes on. Our strength is only, when I say our, the company's strength is getting stronger. That's a good thing. Momentum, it looks like it's going to continue. Money flow looks higher than it's ever been, and we're going to validate that. The relative momentum went from bottom of the barrel into the ground, scraping the sediments through the oak barrel, coming up through the ribs of the barrel, and it's trying to breach. So it has made a clear reversal from the depths of the bottom of the sea to now almost at the bottom of the seafloor. So yeah, if you have any questions on any of my analogies, go ahead and just send me a comment. Okay. Looking at shares outstanding, you can see there's been a little bit of dilution from 2019 to 2023. Not much in the overall grand scheme. Look at these sales. These are in the billions. From 6 billion 5 years ago to 24 billion. That's 5 years. In 5 years, it's gone 8x. No, no, no. My math is off. 6, 12, 18. It's gone 4x. So 24, 48, 72, 96, whatever that math is in my head, 120. Could this get to 100 billion in sales in 4 years? I mean, I don't know. EPS here went from gosh dang negative to positive. Um, so we're gonna run my calculation to see what this is. And if you're asking how I got this crazy calculation, I worked at a micro cap, small cap firm. We had regulators come in and they said every 100 million in sales was equivalent to a $1 share price. I do add the market cap if it is over 1 billion because that's when you start to have big money move your stock. So we have 66.9 billion up here, which is right. And we're going to go down and look at cash and debt and all that fun stuff. And we're going to look at the quarterlies. Okay, so we have to make sure they're USD, all USD. I do not like this. We'll check that in a minute. Okay, cash, they do have plus 5,596,000,000. Good for them. Total debt, not that much. 1,916,000,000. Not bad. Okay, total assets is 13.7 billion. Total liabilities is 9.6 billion. That is a $4.1 billion buffer, which is kind of scary. You would like to see the assets be at least twice, but they're growing at a substantial clip. So whatever, keep the magic sauce going. I don't see any CEO purchase. Okay, there are remarks here. See remarks, see remarks. Neil Mehta sold $29 million worth. But that was only 1.6 million shares out of what it looks like 49 million, 49.6 million. So it looks like they sold not a huge portion of their available shares. This could have been pre-planned. And then this person sold 48,000 shares, which was less than 10%. SFK, again, we have SFK kind of liquidating a little bit. And a little bit. Green Oaks also selling some here. I like to see buys. I'm not seeing red flags of the CEO selling. Again, you don't see the CEO selling or buying. Let's just look at their income here. Ooh, their gross margins are not as attractive as I thought. Every 4.8 billion they they spend, they get 6.5 billion back, which is a good return. 25% gross margins. It's a good return, but you'd like to see that above 30. Plus, for high growth companies, I don't know if this company is high growth at the moment. So we're gonna grab this here. This is our information. And again, I do want to recognize their quick ratio is at a 0.9. You want to be at a 0.1. You want to be at 1 or higher. That means if they were to close their doors tomorrow, they would almost be able to pay their debts, notes, liabilities off. But since they're not at 1 or above, they are just coming a little bit short. Um, you typically see this with growth companies. And you do also want to give them credit and recognition. Their debt went from 0.68 to 0.47. They are addressing their debt. So, and they are profitable substantially. So, with all that said, let me just stop talking. We're going to divide this by our 1 billion. We have two kind of different numbers here. So we'll do 1,620,000,000 as our conservative number. $43 stock trading at 23. That's almost a 100% move. And we're going to grab this 70 bill here. We're going to just add 0 plus 0. It doesn't want to load. Okay. Okay, and we're gonna add, or we're gonna divide by 1,179. $40 to $60 stock price. I don't see anyone that has it as high as me except for B of A Securities. They have a $30 price target. Um, and again, that $30 price target does indicate the upside resistances here. Institutions own 52%. That is older data. Newer data suggests, again, older data says 52.9%. I'm gonna say, I think it's all-time high. 83% from 52. That's 31, about a 30 to 31% increase. And I don't want to be mistaken. I think this is all-time high. Yeah, all-time high institutional hedge fund ownership. Wow. Do we have our Vanguards and our BlackRocks in here? Let's see. We have Morgan Stanley. So Bally Gifford added 21 million shares. Kim Baum added 2 million shares. SB Investments, they were selling. We did see that. They sold about 30 million shares. And Morgan Stanley decreased about 50 million shares, a little bit below 50 million. So quite a bit of reductions. Let's see if we have Vanguard or BlackRock down in this table. They could be starting a position and they may not be to that level where they are in the top ownership. So Vanguard. Okay. So Vanguard owns quite a bit. 40 million in this fund. I'm just looking through and I don't see Vanguard selling or decreasing their position. So that's interesting. BlackRock. A lot of BlackRock. Okay. BlackRock have some, they decreased. They decreased. BlackRock here added. New position. New position. Decreased. Okay, here we go. BlackRock as a whole, they own 29 million shares. They decreased about 20%. So that's where we see that Vanguard and BlackRock. Um, if I'm just looking at this from a technical, non-biased side, I don't own anything, but I mean the money flow points to record institutional hedge fund investment. The momentum is looks like it is going higher. The strength is at all-time highs, and all-time highs, it's only at 40, it's at 50. So there is a lot of room to the upside, in my opinion. Um, and again, we do have our gap down to the 19, and we are also going to have um, some resistance around 26, 29, 30 area. So that is my opinion on Coupang. They are very profitable um, in terms of their overall sales. That's great. And once they continue to attack this debt, they're going to look even better, more attractive. We do have our insiders decreasing positions, which is kind of discouraging. I would like to see the CEO buy, especially down in these areas. Um, that's what they have going for it. The PE and the forward PE are a little expensive. We like to see this around 15. However, momentum's on the side right here. Like it's just, I do see this going up. So brace yourselves if you are short. If you think I'm crazy, that's totally fine. Mm. Sales over the past 5 years, super solid. EPS year over year, that's incredible only because they were negative last year. This will tone down quite a bit. I would like to see the EPS over the past 5 years. It's not going to be attractive, but it is going to be true. So, yes. And it looks like for 2020, did they already have earnings in 2024? Let's see. I think they did. Yes, they had earnings on the 27th. So it looks like they're guiding to be negative 60%, but I don't see that being true. So they surprised to the upside on the EPS. Revenue also surprised. So you know what they've done, what they could have done, which we're seeing a lot of companies do now. Oh gosh, we saw this last week with oh my God, who reported last week? Oh my goodness. It's escaping me, but they guided lower, but they surprised on earnings. I posted on it. Let's just see. Oh God. I'm just really beating myself up here. Um, I'll pull that up. But basically, several companies, UiPath. Um, this one is not coming to me for some reason. I'm gonna let that load. Anyway, if you made it this far, consider subscribing. Thank you so much for watching. The company that I cannot think of. Um, come on. Come on. Okay, well, that's loading, and I cannot think of it for the life of me. It's not here. Um, anyway, they could have guided lower last year to just kick butt this year. Like everyone is expecting horrible numbers, but the leadership knew they were gonna just bang out some incredible numbers. So, um, the stock I was talking about was drum roll. Stocktwits, come on. Um, not Open Door. Fastly. That's what it was, Fastly. I think Fastly will look good next year. Anyway, thank you for watching. Have a great day. Have a great week. If you're in this one, good luck. See you tomorrow.